Let's now welcome on board Keki Mistry, Vice Chairman and CEO at HDFC, to talk about their numbers. Keki, let's start off with your NII growth. The growth has clearly managed to surpass market expectations. Is it fair to infer that, to a certain extent, asset repricing could have led to this? And could you highlight the extent to which the portfolio has been repriced?
See, let me explain to you. When our funding cost is based on external benchmarks, our lending rates are determined by a prime lending rate, what we call a retail prime lending rate. Now, the retail prime lending rate reverses, increases, decreases, whatever it is, generally in line with the policy rates. So when policy rates increase, the retail lending rate will also increase. Policy rates reduce, the retail lending rate will also reduce. But in reality, what happens is that the contract which we have with individual customers specifies that the change in interest will only be effective at the end of or over a period of 3 months. So if you've taken a loan, let's say on 1st January, then your loan gets repriced on 1st January, 1st April, 1st July, 1st October. If you had taken the loan in February, similarly, it will be February, May, and whatever, every 3 months. So whilst the borrowing impact is immediate, because all borrowing is linked to external benchmark, the increase in lending rates only comes over an average period of, let's say, 1.5 months. Everything gets repriced on an average in 1.5 months. So there is that lag, which is transmission lag, as we call it, between lending rates and borrowing rates. And in the previous calls also, we specifically said that when there is a sharp increase in the policy rates, the immediate transmission on the lending side is not seen. The transmission will come over 1.5 months period. So we've not seen any rate hike recently, and therefore the full benefit now of the rate hikes is now in the system. So from here onwards, logically, the spread should be more or less stable. So spreads have remained stable at 2.29. Net interest margin has actually moved up. Our net interest margin last year was 3.5%. This year it stands at 3.6%.
3 consecutive quarters of a 20% AUM growth. Would you say that the things was slightly softer in Q3 and Q4, and what is the expectation for FY24?
I would say my sense is that you would see a strong growth in the year ahead. On a standalone basis, as HDFC is today with our existing distribution machinery, we would expect the mid-teens to slightly higher teens kind of a growth even next year. But when you move into a banking structure, because of the much larger distribution framework, the much larger distribution platform of the bank, the massive amount of under-penetration of housing loans amongst the bank customers, logically one would expect the growth numbers to be strong. Now, when you compare first quarter and fourth quarter, there's a bit of an anomaly because the first quarter of last year had the COVID impact. So you saw higher growth in that first quarter as a consequence of the fact that in April, May of 2021, there was an impact of the second wave of COVID. Whereas when you look at the third and the fourth quarter, even in the third and fourth quarter of 2021 calendar year, there was complete normalcy in the economy and there was no COVID impact.
Mr. Mistry, the merger between HDFC and HDFC Bank is expected to be completed by July 2023. But could you talk to us what kind of changes or rejigs are you expecting? Because this morning as well, we understand MSCI is talking about a bit of a change in the adjustment factor.
No, we will be compliant with whatever RBI requires us to do. Whether it's in terms of what they've suggested as far as HDFC Life, HDFC General Insurance, or HDFC Credila. As far as HDFC Credila is concerned, we will get into a discussion with the central bank and see whether it is possible. If the intention is to sell and if there is, culmination of a deal theoretically before 30th June, and the regulatory and because of regulatory requirements, there is a delay beyond 30th June, then to seek permission to continue to onboard new customers. But otherwise, the structure would remain the same. These subsidiaries, instead of being subsidiaries of HDFC Limited, will now become subsidiaries of HDFC Bank. Also, the foreign free float available in HDFC Bank for determining the MSCI and the other indexes would be roughly about, the foreign shareholding room which is available would be roughly about 18.1 or 18.2% as of last Friday.
Okay, that's the word coming in from Keki Mistry. Keki, thank you so much, as always, for taking the time out and speaking with us today at ET Now. Just look